Daily rates live with the mortgage calculator. Today we're going to go through some live rates and then we're going to talk about our deep dive for today, which is DPA loans. So give us just a minute here to get started. Let us go live on all the different platforms. We do stream this on YouTube, Facebook, LinkedIn, Instagram, Spotify, Apple Music, and a bunch of other platforms here. So give us just a second to go live here and then we will get it started. Hope everybody's had a great holiday and is ready to get back to it for the new year. All right, it looks like we're live on all the different platforms, so we can go ahead and get started. We put the chat up on the screen. We're going to go ahead and take the chat off the screen for now, but keep dropping comments there in the chat. And you can also drop any questions you have in there as well as we go through the presentation. So welcome everyone. My name is Kyle Hershey. I am the COO of the Mortgage Calculator, joined here by our president, Nick Hershey, and our sales manager, Jose Gonzalez. We are a correspondent lender that specializes in non-QM loans. And what we do every morning on this show at 11 a.m. Eastern time is go through the actual live mortgage rates for different programs. And then we do a deep dive into a different topic. Today's topic is going to be DPA loans, down payment assistance programs here. So our sales manager, Jose, with 28 years of experience, is going to do a deep dive for us into that later. But before we do that, we'll do what we do every morning, which is pull up the live rate. So Nick, if you're ready, let's go ahead and pull up our pricing tool and see what the market is looking like this morning.
All right, let me switch my screen. We can check out our first 2024 rates here. So as Kyle mentioned, this is our pricing tool. This is for our team of mortgage professionals. This will show us the general rates for today. As I said, it's 2024. It is January 2nd. So we have our general rate sheets live for today. It's just after 11 a.m., so most of our programs are live now. If you'd like a full breakdown of all the fees that go into the APR, a full itemized loan estimate, please get with our team members. We have over 400 licensed loan officers in 24 states. So for today, we will compare a scenario across the programs as we do every day. So we'll set a $400,000 loan amount. We'll set the LTV to 80% loan, 20% down payment. We'll ask the computer to find the best rate options for conforming conventional first. Then we'll check out our FHA options, which is also probably going to be most of our DPA options today. And then we'll go into our expanded guidelines, also known as non-QM. We have over 5,000 additional loan programs beyond the standard here. We also have VA. VA is only for eligible vets and active service members. If you are, just let us know. We can quote it, no problem. And USDA is only for eligible properties. If you do happen to be looking in one of those areas, just let us know. Since not everybody is, we don't do that live here every day. We'll start with conforming conventional. We'll do a purchase, 30-year fixed, primary occupancy, single-family home, 1 unit, state of Florida, county of Miami-Dade. And for all the demos today, we'll use a estimated credit score of 760 and an estimated debt-to-income ratio here of 40. So with these settings, let's check the conventional options this morning. All right, this is a little bit interesting here. So there is some 6 options and a 599 option. Actually, the 6 options slightly better, you see here, because of the APR. So 6% rate, 2.375 discount points, puts the final APR at 6.275. This is almost identical here, the 5.99 for 2.5, slightly more discount points. Puts the final APR just a touch above there. So some good options here. Definitely great to have options with the 5, and definitely great to have options here in the low 6s. Just a month or so ago, these were nearing the 8% mark. So good options here for conventional. All of our customers out there ready to shop. The new year will be a great opportunity. Now, if for any reason our customer doesn't qualify for a conventional program, typically the next option we want to compare is an FHA program, which does allow more leniency on credit issues as well as a much higher debt-to-income ratio. However, for the demo, we'll set everything exactly the same as our other scenario, so we can compare apples to apples across the programs here. So let's check out the FHA options this morning. And the best option here at the top, 5.375 rate for 2.25 discount points in cost, puts the final APR at 6.287. just a hair above conventional in this example when we compare across the programs, but definitely a good alternative here. It's almost identical in price. Most days it's a slight bit cheaper. Today it's a slight bit more expensive. You'll see those programs kind of flip-flop here. But our customers that qualify for both, definitely check out both programs. And our customers that must use FHA, this APR does include the upfront and yearly mortgage insurance, which is required on FHA. So great options here as they have updated those programs. And also there's new loan limits here for 2024 as well, which we did go over a couple weeks ago. Now, where we love to specialize here is if our customer doesn't qualify for either FHA or conventional. Many other banks or lenders will have to deny that customer. But fortunately, here at the Mortgage Calculator, we have over 5,000 other options under expanded guidelines, also known as NonQM. So when we select this option, we'll keep everything else the same, but now we have a new pop-up where we can change the income. So full doc is what we use for conventional and FHA. That's 2 years of tax returns, what most people are used to. So typically we'll choose this non-QM program to take advantage of an alternative. We have asset-related programs, business bank statement programs. The investor programs are just for investment properties. Talk about those in a second. Personal bank statement 12-month is what we use for the demo. That's our most popular. We also have RSU, stated income, VOE, 1099, P&L, and no income CDFI programs. For the demo, we always use the 12-month personal bank statement, and that's our most popular program for our self-employed borrowers. Many times our self-employed borrowers, when they submit 2 years of tax returns, will have various write-offs and may need a little extra help for a little extra income to qualify, or just may not qualify at all with the way they do their taxes. Therefore, we solve that problem either way using no tax returns at all, just their last 12 personal bank statements here to determine a debt-to-income ratio of 40% in this example, using just the cash in the bank, no tax returns involved. So most of our self-employed borrowers qualify for much more income and can therefore get that home they really want. So let's check out the bank statement options this morning. And best option here at the top, 7.375 rate, 2.125 discount points in costs, puts the final APR at 7.767. Pretty much the same as it's been last year, not much change in the non-QM. We should start seeing some new non-QM rates issued later this week, hopefully. But these don't change daily like the FHA and conventional options do. And this APR is a little over a point, about a point and a half higher than the conventional, which is typical. So for a while, non-QM was beating conventional, but this is a more typical market where if a customer needs to use a bank statement program, they don't qualify for conventional. These bank statement options are within about 1 point or 1.5 points of the conventional options, which are amazing for our borrowers that need to use these programs. And if you scroll down, notice we have hundreds of different options here. Some of these at higher rates and costs may allow bankruptcies, foreclosures, other credit events and issues, and some may use slightly different ways to calculate the bank statement income. So please get with our team. They'll find which of the hundreds of variations will work best. And before we go into Jose's example for DPA, we always want to do some investor examples. So final two examples, we'll set investment property here. We'll set the same scenario, 80% loan to value, 20% down payment. And we'll have the computer find the lowest rates we can offer for conforming conventional, and we'll compare that to our non-QM expanded guideline options. Remember, government programs, FHA, VA, USDA do not work for investments. So we'll just compare these two here. We'll start with conforming conventional. Everything's going to stay the same as all our other demos. The only thing we've changed here is the occupancy. So let's check the conventional options this morning. All right, best option here at the top, 6.875 rate for 3.375 discount points in cost, puts the final APR at 7.277. So great option for our investors here that want to qualify full doc, typical conventional loan. But I definitely recommend all of our investors out there and all of our LOs working with investors allow our investors to compare our non-QM options. So before, these conventional options were a little bit outpriced and not feasible. Now they're decent, but I would still recommend we compare our non-QM options. So we'll set up the same exact demo. And this time we'll choose expanded guidelines, also known as non-QM. And the first thing we need to set is our income type. So for an investment property, the most popular income type and the most popular loan by far for our team here is the DSCR loan, because it doesn't require any income or employment or documentation on that from our borrower. We simply use the estimated rental income from the appraisal to determine A DSCR value stands for debt service coverage ratio. If the estimated rents can cover the expenses, the PITIA of the mortgage, aka the property cash flows, that's a ratio of 1 or higher. We also have options for ratios under 1 where the property doesn't quite cash flow. For the demo, we'll put 1.5 so we can see all the programs pop up. And finally, for a non-QM investment property, prepayment penalty is standard, so we must select an option here. 3 years is standard, what we use for the demo. We can select 0, that will limit what shows up and cost much more. We can also select 5 years, which will again limit what shows up, but does save our customers some money. 3 years is standard for these programs, so that's what we'll use for our demo here. So let's check the DSCR options this morning. All right, best option here at the top, 7% rate, 3.5 discount points in cost, puts the final APR 7.526. So remember the conventional options were 7.2 something, I believe, this morning. Here we have a DSCR option within just 0.3 or so of the conventional, which is absolutely amazing. I'd say 100% or so of investors that are comparing these programs will choose the DSCR option when they are that close in price. So definitely recommend all of our customers out there check out non-QM, specifically DSCR options, and compare it to conventional. And all of our MLOs out there, make sure you present these options as well. And if you scroll down, notice we have hundreds of variations. Some of these may allow bankruptcies, foreclosures, other credit issues. Some of these may allow different ways to calculate the income, such as short-term rental income, very popular request. So tons of different options. Please get with our team to find the best combo for you. And now let me switch my screen and we'll get into our example for today. So for those of you that joined us earlier, you know our topic for today is going to be on DPA, also known as down payment assistance. So all of our customers out there are now shopping again with the new year. So definitely want to present some of these great options as DPA was, again, not very feasible when the rates were a little bit crazy. Jose has done a couple episodes on these programs recently as the rates have started to come down and these programs become more feasible. And today for the new year, they definitely will be even more feasible and allow more of our homeowners or more of our potential homeowners to actually become homeowners. So Jose, why don't you talk a little bit about the programs you have, and then we'll go ahead and share your screen and check out those examples.
Good morning, everybody. Thank you for joining us for Daily Rates Live with the Mortgage Calculator. So we have a couple of options here to share with you regarding down payment assistance and closing cost assistance as well. Now, what we are talking about here are not the localized down payment assistance where you have to sign up as the borrower and where you have to sign up as the loan originator. We are talking about a readily available program that also does not have any income limitations as well. So readily available to all borrowers in the market, obviously as long as you qualify credit and income, and readily available also for all loan originators to be able to offer, which is very key because we are a national based company. We are not a locally based company, and a lot of the local programs do have restrictions that would require you to participate locally with the restrictions that they have. So, with this program, we have a forgivable option, we have a repayable option, and then we also have a closing cost assistance option, which is also repayable, not considered down payment assistance per se, but it all basically goes to the same spot. The down payment assistance repayable, well, let's go with the forgivable option first. Does have a 620 minimum credit score. The repayable option, the closing cost assistance option does have a 660 minimum credit score. To go above 43% TTI on the forgivable option, you do have to get a U.S. approval. And we'll also let you know that 2-unit properties as well as manufactured homes, double wide only, are also possible for this program. What is not possible is 3 and 4 unit. So again, going over the FICO scores for the forgivable option, 620 is the minimum credit score. For the repayable option, 660 is the minimum credit score, as well as for the closing cost assistance option, also 660 is the minimum credit score. So excuse me, let me share some options with you now here. So our first option is our FHA purchase, 3.5% down, forgivable DPA. Now, this means that you don't make payment, and as long as you are owning and living as a primary occupant on that property for at least 60 months, the first 5 years. After 60 months, the loan is forgiven, as opposed to the repayable option, which is a second mortgage, 9.99% with a 30-year amortization, but a balloon in 10 years. So for our first option here, you're looking at 8.5%, has a cost of 0.044. Now, there are other rate options up and down the rate sheet. I just basically chose the one which was closest to par, and also the least expense for the borrower, because in the DPA option, usually lack of funds is the issue they're participating in the program. So here's a nice little twist: USDA DPA. So this particular DPA option does allow you to combine it with FHA or USDA. So with USDA, you are already at 100% LTV. So essentially that 3.5% down payment assistance is going to be used for your closing costs. And that again is the forgivable option. And look at how much lower it is there, 7.125 when you go USDA. So now our FHA purchase repayable option, the big benefit to the repayable option, obviously being repayable is not the benefit, but a lower interest rate, because you will notice this one is at roughly 7.5%, whereas the forgivable option was at 8.5% for roughly the same cost. So repayable option, much lower rate. And then let me give you closing cost assistance options. We have 3 of those. First option will lend you 5% of the purchase price for your closing costs, 7.75% on that one. Next option will lend you 4%, a little bit lower rate there, 4% of the sales price towards the closing costs, so it's 7.625. And our last option here is 3%. And again, pricing gets a little bit better there. This one with a little bit of a lender credit instead of cost to give you 3% of the sales price towards your closing costs. And again, this could be for markets where very competitive, seller credits are not an option. You're trying to compete for the property. This is one way to get the closing cost assistance without having to ask for seller credit and possibly not get the deal. So 3 different ways you can do it here: our forgivable option, our repayable option, or our closing cost assistance option.
All right, great. I don't see any questions, so I think we can go ahead and wrap it up here. Remember, we do this show 11 a.m. Eastern, where we go through the live rates and then do a deep dive into a different topic. So we'll be back tomorrow with a different topic. We appreciate everybody tuning in. Thank you, Nick. Thank you, Jose. We'll see you all tomorrow, 11 a.m. Eastern, for the next episode of Daily Rates Live with the Mortgage Calculator. Have a great day, everyone.
Thanks, everybody.